Hey, what's up? It's Adrian from Money Metrics. Today, we're going to be talking about your credit score. Now, in Canada, your credit score is extremely important. It's going to allow you to grow and achieve financial success a lot faster if you have a better credit score. So today, we're going to be talking about why your credit score is important, what you can do to improve your credit score, and then we're going to talk about what opportunities a good credit score is actually going to open up for you and how to use that to your advantage to keep growing. Before we get started, the first thing I want to do is talk about what a credit score is. So a credit score is a way for lenders to know how trustworthy you are with their money. Now, when you're given a loan and you pay your loan back, it's going to improve your credit score. If you're given a loan and you don't pay the loan back or you pay the loan back late, it's going to hurt your credit score. So essentially what lenders want to do with your credit score is they want to be able to see that they can trust you to make your payments and to make your payments on time. And if you can do that, your credit score is going to increase and more lenders are going to trust you. Why is your credit score important? Well, in Canada, your credit score is essentially your universal trust metric. So what that means is instead of having to build a relationship with every single lender out there and every single person out there, you can use your credit score to show proof that you are trustworthy. So you can go to one bank, get a loan, pay that loan back. That bank will then push that data into one of the credit score companies. That company will then store that data and let other people know that you were trustworthy, that you did take out a loan, that you were able to make payments on it, and that you did pay the loan off. Now, the more you do this with different lenders, the more trust you build through your credit score. And what this allows you to do is when you go to a new lender, they can look up your credit score, they can see your payment history and say, you know what, I trust this person because on this credit score, it shows that they've always paid their debt and they've always paid their debt on time. Now, if the reverse were to happen, if you took out loans and you didn't pay them back or you always paid late, this would affect your credit score negatively. So when you went to a new lender or you went to a new person and asked for money or asked for a service or a contract with that person, they might look at your credit score and take a look at it and say, well, I don't know if I can trust you because every time anyone has given you money, you haven't paid it back on time or you just haven't paid it back at all. With your credit score being so important, how do you actually improve your credit score and how do you build a good one? Well, the truth is a credit score takes time to build, but it's not hard to build it and it's not hard to have a good credit score. There's going to be a couple factors that influence your credit score. One of them, and the most important, is going to be your debt payments. So if you take out a loan, making sure you always pay your loan back on time and as agreed is the number one way to keep your credit score high. The second piece of it is going to be the total amount of credit you have versus the total amount that you've actually utilized. Now, what does this mean? Well, say you have a credit card and the max balance on your credit card is $5,000. Now, if you use $500, pay it back, use $500 again, pay it back, this is a very good utilization rate because you're less than 10% of the credit card. However, if you use up all $5,000 and then you make minimum payments on the card so your balance is always maxed, then you have a very high utilization, which means that you're maxed out on the debt that you have and you can't afford to make above minimum payments. Now, even though you're making minimum payments, and this helps your credit score, only making minimum payments and having a very high maxed utilization is going to negatively affect you. Now, the final thing is going to be how many different lenders trust you. So one of the big pieces as well is going to be if you only use one lender and only one lender is vouching for you, saying that you've always paid off your loans and you've always paid them off on time, it's good, but it's not going to build trust across multiple lenders. However, if you have a couple different lenders who you're always borrowing from and you're always paying back, now you have several people vouching for you. So when a new lender looks at it, they're looking at it and saying, well, every single lender that they've worked with, they've paid off and they've paid off on time, so we're happy to also extend a loan to you. As I continue with this channel, you're going to learn that I'm okay with some types of debt and very against other types of debt. So please keep that in mind when I say this next section. Now, the best way to quickly build your credit score is going to be going out and getting a credit card or getting several credit cards. Now, I want to preface this by saying if you are not responsible with money and if you are not making regular payments on your credit card as it is, do not get another credit card. Credit cards can be extremely dangerous, but they can also be extremely useful. So I want to just start this piece off by saying if you cannot manage a credit card, do not get a credit card. If you know yourself, do not get a credit card. You can build your credit score in different ways, but right now I'm just going to be talking briefly about how to build a credit score with your different credit cards. One way to be able to build your credit fairly quickly is through using credit cards. Now, the method that I've seen a lot of people use and a lot of people have success with is having several credit cards and using these credit cards for different things. For example, Most grocery chains now have their own credit cards where you earn extra points when you shop at the grocery store using their cards. Well, you can get a credit card for your groceries and only use that credit card when you're shopping in that grocery store, making sure that you pay it off in full at the end of every month. The other thing is most gas stations also have their own credit cards where you also earn more points. So you can get a specific credit card for a specific gas station and only use that credit card for gas station purchases and make sure you pay that off at the end of every month. Another thing could be you start a new credit card and only pay your phone bill using that credit card. Now, by segmenting different bills into different cards, what you're able to do is you're able to build trust with multiple lenders all at once. And by making sure that you're able to pay off these credit cards in full at the end of every month means that basically what you're doing is you're building the trust with all these lenders saying, hey, I borrowed this money, here it is back at the end of every month. You're not going to be paying any fees yourself and you're not going to be paying any interest yourself. And that's something that's very key here is making sure that you only make purchases on your credit card that you are 100% sure that you'll be able to pay off by the end of the month. Now, if you're buying anything else, if you're splurging on something else or something that might be pushing your budget a little bit, do not put that item on a credit card. Take that item, put that, and pay for it using your debit card. So make sure that you're only buying things that are absolute necessities that you are 100% sure that you'll be able to pay off at the end of the month using your credit cards. And what that's going to do is that's going to slowly build up your credit score. So when it comes time to apply for a bigger loan, you'll have a better credit score and you'll be able to get a loan at a better rate. So why do you need a good credit score and how is that actually going to help you with financial success? Well, the biggest piece of a good credit score means that you are trustworthy. And when you're trustworthy, more people want to work with you. In Canada, a credit score is used for everything, for applying to credit cards, for applying for a mortgage, car payments. Even if you're applying to rent a property, your credit score is going to show people how trustworthy you are and it'll give them an idea of if they want to work with you or not. If you have a low credit score, you're going to have a harder time finding people to work with. Versus if you have a high credit score, you have a high trust rating, more people are going to want to work with you. So if we expand that out further, essentially what we're going to do is we're going to use that credit score to our advantage when we're making investments and when we're trying to achieve financial success. One of the biggest things in real estate would be on your mortgage. If you have a low credit score, you're going to be paying a lot higher mortgage rates than if you have a high credit score. So say you were buying a property. If your mortgage rates are higher, you're going to be spending more on the servicing cost of that property, so you're not going to be earning as much revenue. However, if your mortgage payments are lower because you have a good credit score, all of a sudden now you're going to be having more cash flow at the end of the month and the property is going to be more profitable. So what we're going to do is we're going to utilize this good credit score to get more people to trust us. You're going to use that trust to put it towards something where you're able to leverage other people's money. You're able to leverage loans in order to build more wealth. And we're going to get into that a lot later in different videos. But for now, the base that you kind of have to understand is if you have a high credit score, more people will trust you, more people will want to work with you, and what that means is there's going to be more competition to work with you, which means, in turn, that more people are going to lower their rates, and more people are going to try to do things to convince you to work with them or borrow their money. I hope you got some value from this video, and if you have any questions, please comment below and I'll do my best to answer them or maybe make a follow-up video to answer any additional questions. Now, I hope you did get some value, and if you did, please like this video. It helps get this video shared with more people, and so more people can achieve financial success. Please also subscribe to this channel. Your subscription means that you're going to see future videos that I make, and you're going to be able to get more information on different topics around financial awareness and how you can achieve financial success. So I will see you next time on the next Money Metrics video.